This is our Forex blog for March 27th, 2014. Like I've said in the last few weeks, we are rewriting our Forex trading signals to work with C++ versus Visual Basic, so there's no limitations. But in the meantime, you can use our Forex signals the way they exist, and you can also trade in a way that I think is one of the best, which is to use our currency indexes. You can see as a chart, just like the S&P 500 and NASDAQ are a chart of those component symbols or stocks. These are all the dollar pairs as one chart, all the euro pairs as one chart, pound, yen, and of course the other ones, the Swiss, CAD, New Zealand, Australian. And it's pretty easy to just look at this and see that this one's in an uptrend. This one's going sideways and it breaks out right here and it goes up. This one's in a downtrend, which has, pullback trades that you can go short on. Downtrend goes up, you sell the uptrend, goes down, sell the uptrend, goes down. Uptrend, you can see the daily, weekly, monthly trend is here. Here's the hourly moving average, so preferably above that you want to be buying. And you can see it broke out of this trend line right here at 10. And so there's many ways to trade with this, and that's just trend lines, fib levels, fib targets, are just a few of them. So let's scroll back and take a look at this euro pair right here. It's been trending down. You can see towards the end of the day, yesterday. Here's the previous day's close at 6 o'clock, 1800. And you can see it broke underneath there. Tried to go back above and failed right here at 2. Great place to short. This yellow line is VWAP, the price most traded each day. It tends to be a great resistance area and a great place to go short. So which currency is strong to buy? Well, the euro is above all the pairs. So which currency is strong so you can sell the euro versus it? Well, you can see the pound's extremely strong. However, it's above the upper containment band. It might need to pull back a little bit more. You might want to draw your fib on this and wait for a 50 or 62% retracement. This level, and especially the 62% level, very likely to hold as support. Let's take a look at some of the other ones at that time. Here's the Swiss. All of a sudden it got stronger. The New Zealand, super strong, and you can see it was above the upper containment band, pretty much likely to reverse when that happens. And as you can see here, the price hits these bands and tends to bounce most of the time. When it is super strong and goes through it, you want to look to buy the pullback. So this is pretty likely to go up right here, the New Zealand. And if it doesn't really matter, because if the New Zealand falls and the euro falls, if the euro falls at a faster rate than the New Zealand dollar does, you can still make money by buying, in this case, selling the euro New Zealand. So we're going to bring that chart up, euro New Zealand, and this is coming up at 9 o'clock. We're looking to sell the euro New Zealand at 9. We're looking for a sell. So this is in a big downtrend. Here's, 9 o'clock, right? You sell this area right here with your stop above the high. And so you might have lost the first time. If you had a little wider stop, you wouldn't have. But you get into it again, and you can see the trade worked. So the whole key to trading really is small losses when wrong, and much bigger wins when right. And the currency index really helps you do that. Lets you see which currencies are strong, which ones are weak. It lets you see trend line breaks. For instance, the Australian here. Daily, weekly, monthly trend is up. It's kind of hovering right underneath VWAP. You have a trend line break right here at about 10 o'clock, right? Which currency is weak at that time? Well, you can see the Swiss has been trending down, had a nice pullback. It's right near the hourly, and so if it does continue down, the lower containment band's a good distance away. This one, the Australian, the upper containment band's a good distance away. At 10 o'clock, you're looking for buys in the Australian Swiss. Here's 10 o'clock, and you can clearly see on this chart, it also happened to break a trend line right here. So you go long, you put your stop underneath this little area right here because it was kind of going sideways. If you really want a stop that's not likely to get hit, you can have a little wider one. That's a little too wide for me. And it goes your way a little bit, pulls back. At that point, whether your stop's here or here, you want to yank it up maybe just a little bit underneath this trend line, right? So your initial risk was probably this. It soon becomes this. And then once it goes up, typically strong currencies will make two-wave moves. So this is the first wave, pullback, second wave. You want to draw your fib off of this level. You have your fib targets ahead of time, and usually the 1.618 is the farthest it's going to go. So you draw your fibs off of this, and as I predicted, and happens probably 70-80% of the time, that's pretty close to the farthest it will move unless it's extremely super strong. So you know ahead of time. And you can, scalp these trades, get in, make a small profit, get out, get in again, get out, a little sideways flag pattern, get in. You know ahead of time this is your max profit target right here. But even that last trade after it's already made its move, pulled back, made its move, went sideways, third wave up, or some people might consider the second wave, or if you're a long-term trader, it might even count as just one wave. But nonetheless, small risk, bigger profit, even when you get in super late. And our software pretty much shows you ahead of time which ones are likely to go up. Because this one, the Australian, the daily, weekly, monthly trend's up. You can see the low. It hit it again. Third time it hit it. Usually triple bottoms, price breaks it and continues down. The fact that it didn't, you actually kind of know that this thing's going up at 945. So you really could have anticipated a move up at 945, which is much closer to the low right here. Could have bought right here with a tiny stop underneath the low and caught more pips on the way up. But even if you got into it a little bit late when the trend line broke right here, 81.82 went up to 13 level. So 30 pip potential profit on that one. Look at the New Zealand. Super strong move up, pullback, just a slightly lower low, goes sideways for an hour and a half. Breaks out right here at 10. You know the Swiss is weak. This is another one at 10 o'clock. It's very likely to go your way. And you can, not only this, but what's pretty about this chart is you have fib targets and probably fib retracement levels all in the same area. Notice it hit the 1.382, then the 1.618. If you draw your fib retracement on the whole move, I would do it both from here, and let's make that a little thicker, and then you can see it's a 62% retracement off this last move up, and then you draw your fibs. These are called fib clusters. Maybe it's a little bit more advanced for novice traders, but if you trade for a living, and you're trading huge trading sizes, you can see it's a 38% retracement of the whole thing, 62% retracement of that, plus it was a Fibonacci target. So you have this, down move, retracement, down move again right to these fib targets. You have the 382%, 38.2% retracement of the whole move, and you also, from this move to this move, you have the 62% retracement. So this is a major fib cluster, combined with the fact that the individual currency chart of the New Zealand was going sideways. The Swiss was weak and it had a pullback right to a major likely reversal area, the hourly moving average. Everything combined to give you this perfect trade right here. And again, you can see how much it went up versus what your risk is. This is, 6 to 8 times bigger profit than what your risk is. And that's the key to trading. But the more you know, the better you're gonna do trading, and you're gonna trade more lots on this trade because our currency indexes support this trade. The fib two-wave pullback trading system supports this trade. It's at a 62% retracement of the last move up. It's also at the 38% retracement of the big move. So this is a major Fibonacci cluster area with all kinds of fib areas right here. It's, I would say, professional traders that trade for a living, that need to make money every day, every week, every month, every year. Fib clusters are one of the highest probability. And you can also do it on each individual currency as well. This last move from here, these are all the New Zealand pairs. Notice it didn't even retrace 38%. The Swiss, had a deeper move back. That's what caused the New Zealand Swiss to move. But if you see this high up here and the low down here, you can see, I'm sorry, I drew that wrong. You can see it made a 50% retracement. 50 to 62% retracements are super high probability, happens to be the hourly moving average. And you also have the upper containment bands just above it, which also is right near the 62% retracement. So it's probably 80% likely not to go above this level because of how weak it is. Daily, weekly, monthly trends super weak. Our perfect oscillator is also showing extreme strength right here, which means it's likely to reverse. These are reversal areas, especially when currencies are weak longer term. You can see the New Zealand also had an extreme move down twice for this time of the day. It measures statistically how far the moves are, and it's pretty much at a likely reversal area right here. And it drifted down just a little bit and went sideways. Very high probability. Everything added up to that trade. So it's a little bit late. I want to get back to working on my trading systems and also eat dinner, spend time with my family, but I will try to do a blog video, every day to every other day, even as we're redoing our Forex trading systems and signals. It's come along really well. And you watched yesterday's Forex blog because I showed a scalping method using range charts and our volume profile, which is amazing, and I've actually already coded it into the new Forex signals in C++. It's one of my favorite new scalping ways. So if I want to sit down for 30 minutes to an hour to trade, and I don't have time to wait for hour to 3 hour moves to happen, I'm going to try to scalp for 5 to 15 pips over and over and over again. When you're scalping, you need to be right more than half the time, or not be wrong more than twice in a row, so you can trade more lot size on second and third trades. If you have 2 or 3 losses and you increase your lot size, a 10 pip win can get your entire loss back plus leave your profit, then you go back to trading your normal size. So you have to be very accurate when scalping, and this new method I've discovered is amazing, and it's going to be part of our Forex signals. I'll show it again in tomorrow's Forex blog.